too.
I can't figure out, it gave me a warning saying that my audio was off, so I may not get audio. All right, the commission meeting's on the 19th at 10 a.m. Just be aware that we are going to be going over the Bni options at that meeting and hopefully have a vote and a strategy forward after that meeting, at which time we'll expedite communications with everyone on. We're running a bunch of charts and a bunch of numbers right now. And, we just, until the commission gives us their preference, that's kind of in a holding pattern. Now I'm going to go into a little bit more under old business, but anyways, it is one of the main topics for the meeting on the 19th if you want to attend that virtually. The next finance work group is December 1st. The last two meetings I wanted to mention, the recordings, we were not able, the first one, I wasn't, for whatever reason, I tried to record it and there was no audio on it, so it was useless since it was an audio-only meeting. And then the second one, we had a staff record it, and they got a new laptop, and we failed to grab the file off the laptop before it was reloaded, and so we lost that one as well. So apologize for that. Hopefully we won't have that happen again. We have auditor training set up for the 16th and December 3rd. This will primarily focus on private providers. We've had to tweak our presentation a good bit to make it applicable to private providers because there's a lot of stuff in there that pertain to DSN boards that don't pertain to private providers. And since this is really focused on those outside of June 30 year ends, we have a lot of private providers that are either September, December, or March year ends. So we will be holding those two for them. If you're not a private provider, feel free to join. I just don't know how beneficial it'll be other than Kevin's section, which will be about agreed upon procedures. That pretty much is the same for all agencies, but the audit side that I'll be going over is quite different. We hope to record this session and make it available on our website, and we'll be offering CPE to those that require CPE. All right, under old business, I continue to push our Finance Direct and Auditor Resource page. Again, I hope you're frequenting that. Note that as fiscal years change, we update our database that we're using for capturing quarterly reports from our providers. And so there's a brand new link each year, and the link is on our website, and it says, I think it says submit quarterly report for DSM boards and then submit quarterly report for private provider. And use those links. You can just bookmark that page instead of having to keep up with that link that was in an email we sent or in a memo or whatever, however it was distributed initially. So make sure you're using the right link. I actually broke the links that existed previously because we were still having a lot of providers use those old links. So I inactivated them, and now I'm getting emails why people can't access it. So if you use those links on the site, you should be good to go. Also, there's a link to submit your cost allocation plans. Debbie will talk about those in a minute. I think we're good to go there, though, as far as folks turning those in for the most part. And then also there's a link to submit your audit report. Now, all that's going to do is bring up an email and pre-populate it with the proper email address in the subject line, but it is out there so that you don't have to remember where to send your audit report. So visit that page frequently, and please tell your auditor about it. That's the primary reason I wanted it, was for auditors, because they do not have access to business tools. They don't have access to all these emails we're sending out year round. So it's really important that auditors be aware that that's there for their use. Of course, yours too, but really I'm worried about them having what they need to do a good job. The Bni Flip project, the target is still January 1st. We do anticipate that still happening. I do realize that we haven't shared a ton of information. We are still working on fiscal year 19's data as we feel it's the most accurate. We did run some numbers from 2020, but with COVID, you're left with some weird assumptions to make as far as either annualization of July to February data or somehow simulating what services are going to look like post-COVID. So we do feel 19 is the best data set, and so we continue to work off of that. We've developed options for the commissioners to consider. We have not finalized the paper to send them yet. I think we'll finalize that probably today or Thursday. Tomorrow is a holiday, by the way, so that's on Thursday. We also have a Bni work group Thursday at 9. Now, this work group has been meeting with us. This is the third meeting, and they were hand selected or nominated, I guess, by the two associations. And so if you want to attend this, we're not limiting, your involvement if you want to listen in, but our goal is to work with the same group that we've been working with from day one on this project. So that's Thursday at 9 a.m. And if you are interested in that, just get with your association president or director or whatever you call them. Let's see. Also, you might note a lot of weird things going on if you're looking at credit reports and Medicare Part D reports and things of that nature. We can't stand flat-footed and wait till we flip the switch for this on January 1. So there are a variety of system changes taking place, and you may see things that don't make sense as you go out and run reports you've traditionally run. So if you see those things, you can ignore them for now. And we will be doing a training for everybody so that you understand the flow of resources and the different reporting. There are different reports that are available to you to pull what you need so that you can do your jobs. So there's a lot going on with this. Again, if you're really interested in it, probably the best meeting to attend is the commission meeting. And then, of course, the meeting Thursday, if you'd like to attend that, is available. I will take questions at the end of this. I got to get through my entire agenda, and if we have time left over, we'll talk about questions on these topics at that time. I'm going to kick it now to Debbie. She's going to go over the next 3 items with you. So cost allocation plans, Debbie.
Okay. Thank you to everybody that has submitted your cost allocation plans. We have them all but one. In an initial review, looking at them, we're finding that the biggest issue has to do with the step-down allocation and the sequence in which you're putting your items. Some of them are putting admin at the end and so forth. So there are going to be some questions that are going to be coming down the pike over the next few weeks as we work toward finalizing these and approving off on them and so forth. But thank you. Again, like I said, I've got them all but one, and that one received an extension.
I do want to make a comment here real quick. For those of y'all that don't know, we have announced previously that Diane Welsh was hired as our director or our manager of cost analysis, but we also have Andrea Hodges and Matt Coburn that have joined our cost analysis team. So things that you would traditionally have heard from Donna Johnson or Yi-Hung Wu, you will be hearing from those two folks, and then Diane replaced Casey Sternberg. So again, if you see those names pop up, those are the folks working in our cost analysis division, and they're the ones working on these cost allocation plans.
That's correct. Just as an FYI, they're working on a really big project right now that's due on Friday. So that's kind of why I'm doing this, and Diane is not. Going on to the Bni Fy 2021 Recruitment Settlement, I am actively working on that, and I should have something done by the middle of next week to push it up the line to Chris and Pat to review it. Chris and I were talking about this, how best to approach this subject, and other than saying that we're working on it, and if you want to attempt to get a preliminary figure, and again, I'm going to say this is preliminary, the best thing you can do is to take what was deducted from you in the month of June in the 2 payment schedules that went out, divide it by 2 to get a 1-month average, and then bump it up by 20%. And that's the difference between the 40 and the upcoming 60%, and multiply that by the number of months. In addition to that, if you want to look at the volume that's going to be affected as a plus, we are going back to July 1st, and we will be retro paying you the difference between what you have received and the Medicaid rate for your day services and job coach. So the only way that I could think of that you could pull the volume to make a determination as to how much that would be through DSAL. You can probably go in and run your budget reports and look at your actual units. There's a little issue timing wise on that, so I would be more apt to pull your DSAL data.
So in other words, there's a give and take on this. We're going to be recouping 60% instead of 50%. The 20% add-on is bumping that 50 to 60. But then we're going to pay you fee for service back to July 1 for community day and community job coach. And that's what she's talking about, running the DSAL. The problem is you can't run a DSAL for community.
Community, right.
So, if you either have to go through and filter it manually, dump it in Excel and somehow filter it on your end, or the only thing we can think of is run you're talking about the waiver budget?
The waiver budget
right?
reports, yeah.
You should be able to do like that search command or something and pull the actual units delivered.
Yeah, well, they can run the CS waiver, and that it's all of them.
Right.
The issue will just come in for any of the people for IDRD, but there again, you'll know that because you'll know which people are residential because of CTH or SLP 1 and 2 and so forth, the fees that are on there. So, I mean, it's totally doable. It's just going to take a little bit of work in order to get that. But I would suggest, get somebody, if you can, working on it to make a determination as to how much you're going to anticipate receiving back.
Well, and our fear is that you guys some of you, based on some communications with a few providers, are estimating this liability and recording it in your books, while others, when I look at your numbers you're reporting, don't appear to be doing so. So the concern I have is you may be going to your board of directors telling them how much money you've made through the first quarter, but you may not have mentioned or have not quantified how much of that's going to be due back to us. So I just want to make sure that this isn't a surprise for your board of directors or your executive director. We need to make sure that the communication is open and that people realize that those funds are sitting out there. We do plan to do it for the first quarter. July to September, the first goes through. So that's my primary concern. And then, of course, as we release the numbers, you want to validate them and make sure we didn't make any mistakes and they make sense. But that's the primary concern I have is, are people really educating their board on how this is working right now?
Okay, yeah.
Appendix K?
Yep, on the Appendix K, just to give you an update on the first run through, the biggest thing that affected the area of what we were working on has to do with in-home supports. We currently have right now 86 consumers that are enrolled in that piece of the Appendix K for in-home supports. It equates to 79 people that are actually getting paid. That's slowed significantly over the last probably, I would say, 10, 12 weeks. We get one maybe a week, one every other week, so that's slowed. In addition to that, with the revision that came through regarding the retainer data, all of that information was pulled together and it was submitted to DHHS on October 9th. We still have not received any information from them. Once we get information as to what if we are eligible for or so forth, then at that point in time, we'll sit down and go over and review exactly what or if any will be rolled back out to providers.
And just to set the right expectation, this is paying up to 40% loss for certain services, and my first look at it, it looks like maybe private providers are the ones that are going to be impacted by this if we do receive that retainer money. So, there's an issue with if private providers already been able to bill for 20%, do we owe them just an additional 20%, and then how does this impact the board that paid them the 20%? So we've got to work through all those changes. But absent that, providers have been left 50% of day program money for May and June, and I think the period of time before this was like March to something. It wasn't even left 100% rates for them from March through the end of April.
Right.
Not even 50%, 100%.
That's right.
So when we look at this from a retainer system standpoint, retainer payment effective from a BSN board, really the only angle I see there would be related to that 40% vacancy payment. Again, that probably was in your band, it probably was in 50%, so I just have to work on that in my head. But private providers certainly will be getting at least 20% additional funds, and maybe 40 if they weren't paid absences. So for example, adult day health care, they weren't able to bill absences at all. So we will send those funds out in the calculation more information as we make sure that we're looking at it right here, because if we don't have the money and we've made a mistake, we don't want to get out ahead of them and have to unravel what we did. Okay?
Mm-hmm.
Is that everyone finished?
Yeah, I think for the most part, unless they got more questions.
All right, state-owned facilities. Right now, what's in a holding pattern, we've got a couple members of the State Fiscal Accountability Authority that have some questions that we're working through. We've got another project we're working on that is in regards to one of our regional centers that is really more important that we need to get through. So we're focusing on that right now. I'm not sure if we're going to present this at the December meeting or not. It depends on whether we can satisfy the two members that had questions about the 60 properties. But in the meantime, we have agreed to work with providers on certain major deferred maintenance issues you may have. If you have major issues with your facilities that you feel DDSN should be aware of and should have some financial participation in it, you need to bring it up to Andrew Theron and make him aware of it. And we will take a look at it and see what, if any, funding we will provide towards that. There have been some examples of 30-year-old air conditioners at some of these facilities where we're kind of handing over ACs that are well beyond their useful lives, and just to hand those over without any assistance is a little concerning to us. So we do want to look at what we can do that's fair, and it's probably going to be a cost sharing type situation, but anyways, we don't want to just turn a blind eye to those things. So if you have those issues, please bring them up to Andrew so we have vision of what those are. Also, some of the providers, as we've talked to them about transitioning these properties, they've decided they don't want to operate these homes anymore. They want to replace them because they no longer meet the needs of the people living there, or maybe the neighborhoods have degraded over time, or what have you. We're working with providers to replace these homes if you want to do so. The arrangement is that we have to do an equity transfer, and then we can work with you with Housing Trust Fund to pull money down from them. But that is something we will look at, and if you're interested in that, contact Vicki Wilkes, and she'll get with you and see if that's something we're interested in and something we can support or not. So consider that. And then the other thing is, if you charge room and board for any of these facilities, like the CRCFs, I don't know if we have many state-owned CTH2s. I think most of them are either day program work activity, ICF, or CRCF. But if they're CTH2s even, keep in mind that you need to probably redo your room and board calculation. Now, the issue with that is Our current directive requires that you base your room board calculation on your most recent audited financial statements. And there's a problem with that, because you have to incur this cost for an entire year before you can build it into your charges, which is not appropriate in my mind. So what we're willing to do, even though it's not in the directive, I think it's the fair thing to do, and there's nothing in the directive that says we can't do it, since we make those rules up, is if you have a budget and you're like, okay, this CRCF, historically y'all have paid for these items, but now we have to pay for it. Here's our revised anticipated cost for this facility. We can consider review and approval of an amended room and board calculation. So in other words, when you turn in your cost, when you turn your audit this year, you're supposed to have your room and board calculation, if you're a residential provider, private or not, in your audit report. So if we utilize that, then it's not going to have all these extra costs in there. So if that's something you want us to entertain, please contact Debbie or Diane, and we'll be glad to look at that, because it's only fair that you be able to do that. Okay. All right. On to new business. Just want to let everybody know that we have some audits that started to show up in here. And of course, it's been a trying year with COVID. And, we already did a good many changes in the directive, added some new schedules and so forth. Basically what we are finding is that the audits that have showed up so far, some are missing every single supplementary schedule we've added this year, which I don't quite understand that, because auditors are required to send us a signed statement saying they read and complied with our directive. And if you read the directive, I don't know how you can read that and not read that there's additional schedules that are required. They're not, that says must within the directive. And so I don't quite understand that. But anyways, also the memo we sent out late, of course, we've been communicating for at least 4 or 5 months that we were going to get guidance out on how we wanted that information reported. I also then issued a memo in August for an additional 30 days, and in that memo I stated that this extension is to help give me time to get guidance out so that you can address these things in your audit. Despite all that effort, people still move forward with their audits, and now they're having to revise them because they didn't incorporate the guidance. But again, it's mentioned in several meetings, in memos, and emails, so I'm not quite understanding where the communication breakdown was. Regardless of that, we've got to get these things fixed. The one thing I'll let you know is DDSN has ownership and takes full responsibility, well, not full responsibility, but our fair share of responsibility for not communicating in the past audit quality issues. Prior to me getting here, here comes our Director of Internal Audit now. Prior to getting here, internal audit spent a lot of energy on the ROAPs and the management letters and so forth, but we relied entirely on the LLR, Board of Accountancy, for their desk review process to QA our audits, and that really was just a false reliance on a bunch of volunteer CPAs that really don't know what they're looking at either, because we're such a nuanced, odd industry. So anyways, the problem is we haven't really had a feedback loop. And honestly, our quality assurance effort here, even when we had someone in internal audit to review these things, the level of the review was different than what we're trying to do now. So our blame in this is we just haven't told anybody any issues that we've noted. We just kind of noted them and moved on. Well, that was my approach last year. June 2019, when those audit reports started rolling in, I was like, man, we got to do some auditor training and get our directive revised, because we're having some issues. So despite those issues and trying to do training, I really don't feel I've accomplished anything, because the auditors that have turned in their reports thus far were in these trainings, received CPE, yet their audits are exactly like they were the year before, with no changes made based off the training done. So, we've got to get a little bit more formal in our communication as to, the issues we're seeing, and we need to really address them one-on-one with each provider so they know what applies to them and what doesn't, because otherwise it's just generic information and you're like, what is that? Is he talking about me or is he talking about somebody else? So we have made an effort. We will start writing a letter to each. I'm projecting that every board and potentially private providers will receive a letter from me regarding any audit issues that we're noting. And again, the goal here is to improve quality. It's not to beat you over the head. I'm not after a particular audit firm. I'm not after a particular provider. What I'm after is quality work that we pay good money for. CPAs need to be doing their job. Providers need to understand what they're looking at. Providers need to understand the quality issues so that we're not paying, we're paying probably well over $1.5 million a year, if not more, for audit services as a state agent, as a DSM boards alone system. I don't know what the private providers pay. I'd say it's at least $1.5 million based on my knowledge of audit fees and agreed upon procedure fees. So it's a lot of money to pay to get a product that isn't really useful. So anyways, we are developing a QA process, a feedback loop. Your audit may need some revision. It may just be information we're sharing. It may be that we need additional work papers to look at to make a decision on whether we have an issue with something or not. Your audit may get rejected entirely and need to be reissued. That's a real possibility. Some may need to be revised or just a revised schedule provided or something. So it can run the gamut. The other thing I'll mention is if you read your audit report, if you read the independent standards that auditors follow, it is imperative that audit clients know generally accepted accounting principles. They are your financial statements. The auditor simply drafts a document that is they are trying to comply with the requirements of the directive and GAAP. It is your job to know whether that product is actually proper or not and correct. So we've got to work with our providers to get your education level up through training options here, maybe getting you involved in a variety of third-party learning opportunities. I'm really committed to the education of our providers, and it's all in good faith. I want you guys to know what you're doing, and I want you to be confident in the accounting standards. And so the real issue I'm having right now, honestly, is for me to claim that I'm an independent auditor, I have to do what's called an assessment of SKI, or skills, knowledge, and experience of the client. And when I do the SKI assessment, I've got to identify whether they're capable of catching material errors in these financials or not that I'm doing for them. This is simply a service that I'm providing because they don't have the ability to write their own statements, whether it be they don't have the equipment, they don't have knowledge of the disclosure requirements, whatever it is. So if I'm looking at an audit and there's material errors in it, in my opinion, the auditor's not independent because the client was not able to take on the ownership and didn't have the adequate SKI. So I have a real issue that they're an independent auditor at this point, and that's something I have to consider whether I'm going to take up with the Board of Accountancy or how I'm going to handle that. But that's on me as an auditor to make that assessment. And if I can't get there, then you've got to hire another accountant to draft the financials or review the financials on my behalf so that I know somebody looking at this product I just generated knows what they're looking at and will catch my mistakes. So we've got a long way to go there, but we'll get there. And it's not that big of a deal. We just need to educate. And for example, some of my clients would hire another audit firm to review our audit reports we would generate. They charge $1,000 or less to do that service. So I mean, it's an affordable service that you can hire, and then you don't have to worry about whether you have SKI in-house or not. You can hire the SKI outside the agency and have them work on your behalf. Okay, let's see. All right, so I think that's all the topics I want to hit on that. And then I've got Kevin in here. I'm going to pass the mic to him, so give me 1 second.
Good afternoon, everybody. I just sort of wanted to piggyback on what Chris was saying in terms of the ROAP reports. So the good news is we have all but one for the Qs and the boards that we should have ROAPs on. We've got all but one. We either have the report or an extension request. Now, the bad news is the bulk of those came in, on Friday last week. So we're getting around to reviewing those. We have gotten through, I think, about 7 or 8 reports on each side, on the Q side and on the board side, so that's a total of 16. I will say on the board side, I do have some reservations. There were some significant issues made to both of the directives, 04 and 06 this year. But on the board side, what we're following is, what we're seeing, which is why I want to mention it to you, is they're just not following the directive. It's on the ROAP side, it's pretty easy. If they will follow the template and if they will QA that report by a senior level member of the firm before it goes out, then we really shouldn't have any problems. They, of course, should be giving it to you in draft format. So you also, as Chris said, it's your information. You need to make sure it's accurate. But we're finding where gaps of the template are missing. We have some reports where the exception numbers are greater than the sample size, so I'm not sure how that works. So it really is a lot of issues that could just be caught from a solid QA process and making sure you're following the template. We do have some we're going to be sending back that are going to need to be reissued as well. Of course, if you have any questions, please don't hesitate to call us. That's it for me.
I guess, if you haven't received your draft ROAP yet, my recommendation is pull the directive and make sure that you're familiar with the template. And if you see that they're not following what template is, know that Kevin's going to reject it. So you can save a lot of time and energy just by, when you get that, going, whoa, guys, this isn't at all what's in our standard, our directive. So I need you to go back and do this, or you're going to have to do it again anyways. Right. Save yourself some heartache.
Right. Saves everybody time and heartache.
Okay. All right. Thank you. And then cost reports. We're going to also develop a QA process there. I know from experience, I've been doing cost reports for DDS since 1990, and I can tell you that in those 30 years, I've never once received any critical feedback on my product. So I was left to figure out on my own whether I was doing a good job or not, and really there's no good instructions or guidance for cost reports anywhere. Additionally, DSN, to my knowledge, has only done one half-day training ever on cost reports, other than the one we did several months ago. So there are a ton of issues in these cost reports, even the ones I used to prepare myself, because again, I wasn't really up to speed on all these Medicaid rules like I should have been. So cost reports are going to be another area where we've got a journey to take, and we'll get there. And we're not shooting for perfection on audits or cost reports, but we do need to make advancement and start making some progress here and there, just so we're not, stuck in a rut and not advancing the ball. So anyways, you will, as your cost reports come in, we'll have a QA process in place, and you'll be notified of any issues we have with your cost reports. I've pulled some, and they're not sending in their depreciation schedule. They didn't send in their trial balance. They haven't made the proper adjustments. They haven't even turned in a cost report for CS waiver because they didn't know that they had to do one. Well, it's a waiver. It's like IDRD waiver. People not doing their HASCI cost reports properly, it kind of runs the gamut. So we've got a long way to go. There longer than we do on the audit report side, I believe. But anyways, we will work with you on that as well. In all three of these areas, we just got to ramp up our training, and I think communication and feedback is imperative. Again, if you're if you think back when you were a staff member, if you were sitting at your desk doing your job and you thought you were doing a wonderful job and your boss never came and told you the things you need to work, all they did was fix them and pass them on, all the while you think you're doing a great job and you're not. And so it's imperative that we have that feedback loop, and it's imperative that you receive it in the manner in which it's meant. So don't get defensive, don't get upset. If there's things your auditor doesn't agree with, I'm willing to listen to them. As I stated, we met with the human service providers this morning, so some of y'all have heard this already, but professional opinions differ. So people get second opinions with their doctors, and other professionals always have differing of opinions. So there's not always one right answer. What I will say though is that I have access to FASB and GASB resources, and I have researched things extensively before I even put them in a letter to you. So if your auditor disagrees and they have research that disagrees with what I've said, they need to send it to me, and then I'll compare it to mine and kind of work through why I looked at it wrong if I did make a mistake. So I'm not trying to say that I know everything and that I'm perfect. I do have a lot of confidence in my knowledge when it comes to the GASB side of things, not so much on the FASB side. So you folks that are nonprofits probably won't hear as much back from me as the folks on the GASB side. I consider on the GASB side to be, pretty high level knowledge, honestly, on that side, but really, really weak on the FASB side because I just didn't do a lot of that work. So anyways, my point is in this, wrapping up, is I'm not afraid of pushback. If you guys disagree, let's just have a very respectful dialogue back and forth. We don't need to be getting mad at one another. So if there's an issue, I'll get on the phone with you and your auditor. I'll feel free to look up, if they give me a citation, I can look it up, or they can provide that information to me. So anyways, hopefully you guys all understand where we're headed. And the other thing, I did have just an update that's not on the agenda. Celebration a little bit. We did get our 2017 cost report filed finally with HHS. So that's one of 6 or 7 that we have to get filed. I do want to let you know that we are working on 2013 and 14 with our CPA firm that HHS has engaged. And then in-house, we're working on 18 right now. So as we go through 18, you may start as we go through these years, you may end up hearing from us if we have to circle back around and validate anything. Those of y'all that remember Chris Lagourd, he has been hired as a consultant. He lives in Montana. And the reason I mention him and bring him up is that we have expertise in-house again because he used to prepare these for 10 or 15 years when he worked here. And so he is the captain of our cost report team at the time, and he will be training us and ensuring that we know what we're doing. And, I just want you to know that he's on board, and we do have some skills because most of us up here have never filed, none of us have filed a state cost report. So we got a lot to learn. Anyways, with that being said, I don't know if I'll open it up to Pat and Mary for any comments, or Rufus. And if y'all don't have comments, I'll open it up for questions.
Yeah, open up for questions.
All right. You guys got any questions? We'll be glad to take them in the chat, or Ben, I don't know if we can unmute everybody or if they have the ability to unmute themselves. We've got an hour. Holy cow. Woo! Jeez.
How many items on that agenda?
I don't know. 17. 17, but 8 of them are date focused.
They should be able to unmute themselves, Chris. And there's some in chat as well, some questions, I believe.
Okay.
Yeah. Now, are there questions down there? I need to scroll down, I guess. All right. Let's see. Question was, does a provider, if they use the old link, need to resubmit the report for the first quarter this year with the new link? The answer is no. We copied those over to the new sheet. So we're able to discern based on submission date and the quarter, which July to September is for this year and which July to September is for last year. And we just move those over to the new page. Please confirm that private providers who have a contract with DSN, so do not bill Medicaid directly, are not currently eligible to bill retainer payments. Okay, so if you bill through us, that is correct. You cannot get a retainer payment direct from Medicaid. It'll have to come through our books. And as I stated, you know, we had to do our retainer at the state level, not for each individual provider. So once we get through the gauntlet with HHS to get the retainer for us at the state level, we then have to find a way to dissect and pull out individual provider data, which Debbie's working on that, and maybe you figured it out, I don't know, where we can simulate that same exact calculation on an individual provider basis. And when we do that, you will be eligible for retainer payment through us with that process. And I'm assuming we'll send a copy of the calculation or something with it so that you can validate what we've done. Do you have any comment on that?
No, I will be reaching out to some of the boards with regards to the third-party piece, as to whether or not you have paid a private provider 20%. I won't have any way of knowing that from here. So for those of you that are listening, if you could send me an email, that would be awesome. Other than that, I pretty much have the data that I need. It's pulling from multiple reports and so forth to be able to determine who is the service provider and the financial provider and the units and so forth. So we are in the middle of it.
Okay. Ralph asked if you'll receive notification if your audit report's been accepted. I'm assuming that's what that was related to. Yes, I think that would be advisable. Otherwise, you'll be wondering what the status is. So I will commit to that yes, we will send you at least an email, if not a letter, just indicating that we had no issues. And, you know, a lot of the reports don't have, you know, when I look back at 19 and I try and figure out who had the furthest journey to get where they need to be, a lot of providers didn't have a really far journey, but a lot had a really far journey. So it is going to be a big variation. I think the main issue that can set people up for this year that maybe were fine last year is all the nuanced stuff about, you know, recording your day program costs properly, recording the day program recoupment properly, completing the additional schedules that we asked for in the back, things of that nature. So a lot of you aren't far at all. So there may be some that if they complete all the new schedules and so forth, might not have any issues at all. The question, that question's for Kevin. Sitting around. I'll ask Kevin. Ralph was saying that was more of a ROAT question. So I think don't they send a letter that says we've received and accepted your. It seems like I remember them doing that. Because you have to send a corrective action plan too. I'll ask him, and he actually might still be listening. I don't know. Let's see. One large concern about the quality of audit reports is the increase in cost of providers. So if a DSM board has had an audit and then they're asked about the firm to review the audit completed by another auditing firm, that's an additional cost. Then if the DSM still does not accept the audit submitted, where does that leave us? Okay, so first of all, DDSN does not write independent audit standards. We don't write governmental, generally accepted auditing standards. These requirements have been around for at least 10 years from the Yellow Book. The problem is, and if you want to sit in on some AICPA government audit quality calls, you will hear firsthand that the standard setters are really frustrated with these audit firms not doing their jobs properly. They say it point blank. You know, you guys are not doing what we're doing. We have to keep creating new rules because y'all are not, we're doing all these quality checks on audits and they're failing. And, so auditors are getting really, that's one of the reasons I left private practices, because the amount of increase in documentation requirements and peer review requirements is massive. So if you were doing a good job, you still got hit by all these additional requirements. And so it was just getting exhausting, and I had enough of it. But for one, this has been a requirement forever. So in regards to hiring another firm to review, you got two choices. You can either do that, or you can develop the knowledge in-house, or third, you can find a volunteer. Some boards have board members that are CPAs, but I will caution you there. Just being a CPA does not make you qualified to review a GASB audit report. Many CPAs work in industry or do only taxes, and they are not going to know any more than you about a GASB audit report. So it's not just the initials, it's the knowledge and skills and education and experience of that person, not just being credentialed. Secondarily, as it relates to the audit not being accepted, my opinion of that is your auditor is a professional. The standards are what they are. Every CPA, if you're going to compare CPA firm prices and bid things out and assume audits are commoditized and that all auditors are equal, then all auditors should know the same level of knowledge in regards to your industry and GASB and FASB standards. So we are not increasing the expectation. We are setting the expectation where it should have been all along. And there has been we are not creating anything extra except for a few schedules. But otherwise, I will state that all we're doing is we're increasing accountability and oversight, which is our responsibility. If you read our contracts with Medicaid, we're responsible for oversight. Same with state laws and our regulations. That's our role. We're an oversight agency. So if the quality of the audit has not been where it's supposed to and they got to do additional work, I'd have to question why they were slacking off previously and not following the requirements. That would be my answer to that. I don't know if that's what you want to hear, but that's my honest answer about it. What would the new Yellow Book standard requiring a code review? Does this not address the issue of ski in terms of independence? Okay, so the Yellow Book requirements, if we're going to dig into that some, basically, I would recommend you all go out and read it. It's the 2018 version. There's a lot of versions out there, so you just type in 2018 Yellow Book or 2018 Generally Accepted Government Auditing Standards, GAGAS. With the 2018 Yellow Book that was just released, they did increase again, back to my point, where the standard setters are getting really irritated with auditors not doing what they're supposed to do. They yet again increased the independence requirements. One of the things that the new Yellow Book did is basically if you work with a CPA firm that has another shareholder level person in the firm that is an audit expert and knows GASB inside and out, they can do an internal review if that partner or shareholder was not part of the engagement team, was not part of the planning, was not part of the field work, and was not part of the reporting. So if you're working with the firm that only has one audit shareholder, they have no internal capability to check off that review. So then they have to look to the client, and then the client level, you have to assess ski for anyone that can have ski. I mean, like I said, it can be with the finance director, it can be with the executive director, it can be with a board member, it can be with a volunteer that you know from church, it can be a CPA firm that you hire just to review the audit for you on your behalf. It can be obtained a lot of different places. But without that, the auditor is no longer independent and therefore really shouldn't be issuing an opinion on statements they've written for you. And then if we pull the ski assessment, which we might do some of this actually, Kevin and I have been talking about, we're allowed to access work papers of auditors. In fact, when I first started with Elliott Davis, Jim Wise made a visit to our office and wrote us up for one of the DSM boards we were doing out of our Greenwood office for Elliott Davis. And he dinged us pretty good. He found weaknesses in our work papers and our audit report and everything that we had to fix. So DDSN has the right and the obligation to look at audit work papers if they want to. And I think we're headed that direction. Kevin and I have been comparing notes and possibly going to do some of that this coming year. And so if we look at the ski assessment and it says that the finance director has the ski, and we look at it and say, well, I don't know, because you look at the audit they turned in and they were relying on that finance director to be the one to catch all those errors, we got a problem at that point. So in the end, the issue is you shouldn't have material errors in your financials regardless of where you get the ski. If it's in-house, if it's external, we should not have failing audits. And so that's a problem. I hope that answered your question. Also, every CPA firm that does Yellow Book audits is required to have an internal quality assurance process where they select engagements at random and have to do their own QA effort in-house. Again, another reason I quit public accounting. Those reviews are horrible, but you have to do it to maintain your license. So they should have internal QA effort. And if they're doing it properly, their QA team should be finding these weaknesses as well. So I don't know if that also was your question, Joe, in regards to internal code review. All right, any other questions? Like I said, I'm not trying to be ridiculous about this. The issue is we're paying a bunch of money for professional services. They need to be professional services. And if they're standards, and they should be, some of these standards are 10, 15 years old. They're not a brand new standard. So why am I seeing an audit not complying with a standard that's been around for 10 years? It just doesn't make any sense. Either you're a GASB expert and you're appropriate for the job, or you're not. So that's my job, and I think you should be appreciating that feedback instead of, and I'm not saying you are defending it, I'm not saying that at all, but I'm just saying if I were an executive director and I didn't feel like I really knew what I was getting, to have somebody on the other end helping me out to make my auditor accountable and to make sure they're doing what they're supposed to do, I would be thankful. I don't know if that's, the way y'all think, but I would be. That's just me, though. You might want to verify with the AICPA that DSN has a right to review external auditor work papers. I do not think that is accurate. The work papers are the work product of the audit firm, and those are proprietary. Okay. Well, I'll be certain to do that, Laura. I don't agree with that statement at all, but we'll certainly do that. And your contract with DDSN clearly says that we have right to any documentation, as does any regulator. So we'll be glad to address that. Heck, you might even know that from your Inspector General days. Not to put you on the spot.
I think all this does is it paints the picture of a huge advantage going fee for service. We've got to get out of this whole cost report cycle. But unfortunately, we have years of backed up ones to do. But hopefully in several years, this will be whittled down to less complexity. But at the end of the day, if we don't get our cost reports right, it opens us all to recoupments. And in today's world of accountability from HHS. I mean, just from my time here, the accountability has gone from nothing to, I think, pretty intrusive. And not in a negative way, it's just that's government. And so this getting these materially accurate is important to the system.
All right, any other questions? But I will check with the, I'll probably check with the Board of Accountancy, actually. Not sure if the I mean, we can check with the AICPA also, but I'm trying to think who regulates that. So that'd be a state regulation, not a AICPA. AICPA is similar in only an association, and they set audit standards. I don't know that they would get into that level of things, but they might. But okay, we'll look into that. If that's in fact true, then our contracts and our directive have been authorizing that access forever, and it would have been erroneous. We never added, none of that's new, so that access has been in there forever. All right, we lost 7 participants at this point. Anyone else interested in questions? If not, we're gonna call the meeting. And I appreciate everyone attending. And again, you know, we will develop training to help folks. We're not trying to be overly burdensome. I know it looks that way right now because we've got such a long way to go, but I think incrementally you'll see things get easier and more rote and more, you know, just the way we do things. Change is hard. Folks don't like change, and there's a lot of it going on right now, so I fully understand, and I'm sorry to add to your stress. All right, well, we're going to call it. Nobody else has questions. I appreciate it. You guys take care. We'll see you next month.